Well, hello and welcome. My name is Chris Tanner. I'm a business development manager at New Direction Trust Company, and very excited and for a very timely webinar. We have a gentleman who's been investing in real estate for quite a while, and the kind of investing he does works pretty much in any environment. And so, here that we're in this pandemic, and who knows what's going to come here in a little bit. And I think Charles will probably talk about what might be coming as a result of the pandemic, but a good time and a very timely topic to take a look at, well, how do we invest, especially when we have some uncertain economic times. And so with that being said, if someone in our audience could do me a favor, and on your screen, on the right-hand side, there's a little button that says questions. And if you're hearing me and you could just give me a quick heads up that says, yep, coming through loud and clear. Perfect, thank you. So this will be an audio only. Hopefully you're seeing our slides at this time. So you can hear us, but we will not be able to hear you. So the reason I mentioned that is I'm sure there are going to be questions. And so what we're going to do is go ahead and enter questions as the presentation is going along. And what we'll do at the end is I will read the questions out loud, and then I'll turn it over to Charles to go ahead and answer those questions, but just type them in that question box and I'll kind of monitor those. And then at the end, we'll go ahead and get those questions answered for you. So we have one house cleaning item, and then I'll introduce and turn it over to Charles. But today's webinar is really just meant to be educational. We just want to be clear that New Direction Trust does not endorse or promote any specific investment or any specific presenter. So although today we're talking about investment alternatives, it's really intended to be for educational purposes. So before you make any investment decisions, we always strongly encourage you to seek a competent professional's advice, whether that's your CPA or a trusted financial advisor. But with that being said, Charles, I'm going to kick the slide deck over to you, but I was wondering if you might just kind of kick us off and tell us a little bit about yourself and what you do, and just a little bit of background. Charles, I'm wondering, are you?
Oh, can you hear me now?
There we go. There you
All
are. How's
right.
it going?
All right, good. How are you?
Doing fantastic. While you're introducing yourself, I'm going to go ahead and move the slides over to you so you have control. But I was just telling the folks, you've been doing this for quite a while, and you have some real and interesting thoughts and concepts around real estate investing. And so, I wonder if you could just tell us a little bit about yourself and your background.
Yeah, absolutely. So, got into this business just by chance 23 years ago. I was 23 at the time. I'm 46 now, so I've literally been doing this half my life. I started out investing in tax liens, or rather working for a company who was investing in tax liens, and really just took on to it, and really loved it, and just kind of started my business from that point forward. And essentially, as a tax lien investor, you're really at the bottom of the process, if you will. You have a lien on a property, but that could eventually become a foreclosure. So it really just kind of developed into doing this on all levels of residential distressed real estate. So fix and flips, cash flow holds, tax liens, hybrid liens, secondary liens, a little bit of it all. So over time, we've obviously become a very reputable company. We work on behalf of individual investors as well as institutional investors, foreign and domestic. We've got a client in Norway that's got about $5 million with us right now. But every investor is treated the same, whether you're large or small. We like to think of ourselves as a boutique servicing agent. When you call our office, you're likely going to speak to one of three people if you have questions about our investments or about your investments if you happen to have them with us. So what we're talking about today is recession proof investing. Like I said, I've been doing this for 23 years. So I've been doing this in multiple different types of markets, whether they've been strong markets, weak markets, recessions, what's coming up next. I've been doing this a long time, and it has become a niche for the industry, and I'd like to say that we're pretty darn good at it. So when will the housing market crash? That is the question today that everybody is asking, but nobody's really talking about it. We're all still consumed with protests and riots and COVID, and that we're not talking about what's going on behind the scenes. Just today, United announced that they're furloughing 16,300 employees. Last week, American Airlines furloughed 17,000. So things are happening that are going to impact us, and again, nobody's really able to agree on how or when. I went online. I was probably online yesterday for an hour just reading Dave Ramsey and mortgage data and just trying to get my kind of what's today telling me. And New York mortgage data shows that the U.S. housing market is crashing right now. And the reason that people can't really get together and agree, the experts can't agree on how or when, is because right now there's actually somewhat of a boom going on in the housing sales. Once we went under lockdown, our business actually really, took off with the inventory we already had in stock. So in other words, we had in 1 week we had 17 closings in our fix and flip business, and that was the first week of April. So people are at home looking to either move or relocate or buy vacation homes. So the data coming out right now is conflicting. But what is accurate is that applications are already down 10%. So that number is going to grow. So the demand for mortgages is down, and when that happens, obviously there's going to be a trend in the crisis that goes with it. The not so fun fact that we can rely on right now is that in 2009 the peak unemployment was 10%. In 2020, it was late May, we hit unemployment of 14.7%. That's huge. That's a huge number. And our average right now is 10.7 to 11.7. It's kind of bouncing back and forth between, hospitality and restaurants opening back up and things like the airlines having to furlough more people, things like that. So we know there's a ton of people out of work. We know that regardless of the moratorium on foreclosures or collecting rent, is eventually just kicking the problem down the road a little bit, and we're going to have to face the facts at some point. So when we talk about recession proof investing, I like to describe it as layers, if you will. It's not just buying a property and you bought it at the right time in the right place for the right price. It's always good because you have a lot of things that can happen, like COVID. You want to be prepared for every possible circumstance that's out there. If the banks stop lending, you don't want to be invested in a cash flow property that you paid $250,000 for and you're collecting less than the mortgage on it. And we'll get into some of these as we go through, but these are the layers essentially that we put in place when we're looking at ways for us to invest and for our investors to invest, that just provides extra layers of protection so you can invest confidently in any given market, whether it's strong or it's not. So the first thing we're going to talk about is historical patterns in homes that qualify for first-time buyers. What I'm essentially talking about is what happened in the last recession. Well, what happened in the last recession is when it was time to try and turn things around, they went for who was impacted the worst, which is who is impacted the worst now, the 99%. So your primary blue collar workers. And that's exactly what they're going to do again this time. Phase three COVID stimulus is already painting the picture of what's going to happen. Now, these dollar amounts are extraordinarily insignificant. They're not going to protect anything. So again, we're going to have a problem. It's just a matter of when that problem comes. The tenant-based rental assistance I mentioned, only 1.25 billion in that. That's pennies. That's nothing. Public housing operating fund, 685 million. That's pennies. That's not going to happen. And like I said, temporary eviction for moratorium for certain landlords, or for the foreclosures. Again, it's not stopping it. It's just kicking it down the road. What happens when a pilot who has been out of work since March now has the switch kicked back on, and he still doesn't have a job, but now he's responsible for 5 months of mortgage payments. That becomes a serious problem and a serious challenge, and what that creates is more foreclosures, which for our business is opportunity. So we focus on homes that easily qualify for first-time home buyers, government lending programs, grants, that sort of thing. Like we saw in the last recession with, for example, first-time home buyer credit of $4,000. Obama put that was one of the first things Obama did. Was put that in place. So those are the homes we've always focused on. These are homes that people are going to really appreciate, really love. They're not McMansions. They're just typical homes. Next thing you want to do, as far as your protective layers are concerned, you want to buy right. And I should have this in big, bright letters, because none of these other layers count or will work if you don't buy right. And there's a lot to buying right. We heard before all of this happened, we all heard on the radio the commercial of do this in your spare time, do it at home using other people's money, blah 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 blah. There, that's junk. You earn a good living by working hard. So nothing comes easy in life that makes a good profit. So one of our biggest ways that we buy right is we go and attend live auctions. This picture is a live auction, and there's literally one, two, three, four, I think probably five auctions going on at the exact same time. Now, it just looks like some people are just reading a piece of paper, which is literally what they're doing, but they're actually auctioning off a property. So you have to know who's there, who's auctioning it, who's selling it. And that's how you buy right is you do your due diligence, you do your homework, you go to these auctions, and you were able to acquire property for not pennies on the dollar, but in order to make a good substantial profit. Another place we acquire property is through probate courts. uh, People die. I mean, it's just fact of life. And sometimes their homes are willed or left to their kids who don't necessarily have the ability to pay the taxes or pay the upkeep or pay the insurance, and they want out of those very quickly. So this is a list of probate leads. Now, probate leads are pretty tough for the average investor because they take a lot of time. But once you're in the pipeline, if you will, and you've been in it for a couple of years, then the probates just sort of kind of funnel to you. So this is just a list of some of the probates that are in Savannah. So a great way to acquire property. You're essentially ridding a burden for the next of kin, and you're picking up properties for you're buying them right. You're picking them up for far less than what you're going to resell them for down the line. Online auctions are also a great place to pick up and buy right. We bought one about a year, no, 2 years ago now, and we're, as you just saw on the last screen, you see properties 25 to $150,000. We bought one on Hubsu. We bought a beach house for $2.1 million 2 years ago, and we flipped it for 3.6. So there's a large range of homes that are out there. I will stress now that that property is not recession proof. The ones we're talking about are recession proof. That's just an example of how extreme you can go from one end to the other as far as distressed real estate is concerned. Job site inquiries is a great place to pick up properties as well. You go, you say, hey, how'd you pick this up? Or if you're flipping it yourself, you have a sign in the yard, that says PIP Group, I buy homes. And a lot of the times the neighbor will come over and say, hey, I'd like to sell mine. So that's a great way to buy right as well. We do a lot of canvassing, skip tracing, and working with wholesalers as well. That's a whole nother uh, avenue. But again, it's a lot of work to be in the flip business. It's nothing like the 47 TV shows on HGTV. So that is definitely not going to be your recession-proof investing. Avoid large cities. So we invest in areas that are off the radar to institutional buyers. So we've all heard before COVID the cities that were doing so well: Denver, San Antonio, Dallas, Atlanta. Those cities were all booming markets in the turnaround from the last recession. The reason they were the turnaround is because there's a company out there called Blackstone, and their title on their homepage is 100% accurate. They're the global leader in real estate investing. They buy everything, and they were the ones that were behind a lot of that revitalization. Well, guys like Blackstone and us, we can't work on the same margins. Blackstone is happy to earn 3% on a fix and flip, or a tax lien if that's what they're acquiring. Folks like you and I, we it's not worth our time or our trouble if we're not making at least 10% or better. So we can't work and compete in cities like Blackstone competes. So you want to stay off the radar of those big cities. So we don't invest anywhere in Florida. We don't invest in Atlanta, Dallas, or San Antonio. We're in areas like Savannah, Georgia, Greensboro, North Carolina, where we're essentially the big buyer. We're the big shoes to fill in at the auction and in the room, and that helps you kind of create the tempo or the pace, if you will, of the auctions and the bidding and the competitiveness. Another layer, again, we buy only first-time home buyer type properties, VA type properties. So no upgraded finishes. Those folks don't care about the granite. They don't care about the big upgrades that come with a home you or I may want to live in, with the really nice marble bathroom and those kind of things. So we're focusing on homes that don't require all of that. And I'll give it to you here, Chris.
Yeah. So just want to talk a little bit because I know some of the attendees today may or may not be familiar with the idea or concept of a self-directed IRA. But just wanted to mention that as Charles is talking today, he's bringing up a lot of terms like tax liens and buying from a wholesaler or doing a fix and flip. And if you have a traditional retirement plan with a traditional financial planner or a traditional brokerage, your options are publicly traded securities. So if there happens to be a publicly traded security, that's your option. To invest in tax liens or to invest in a long-term rental or to invest in a fix and flip, the kinds of things Charles is talking about. And if you're wanting to use retirement money, it's important you have the right kind of retirement plan. And so I just wanted to mention that New Direction Trust offers self-directed retirement plans. And that's the kind of retirement plan that really it opens the door to the kinds of investments Charles is talking about. I don't want to take too much time here, but I just want to mention that if you have retirement funds and you want to do something outside of those publicly traded securities and you're becoming interested in real estate, and this is interesting because Charles has various ways of investing in real estate, uh, give us a call and we'll have our contact information at the end. But I just wanted to put that in real quick, Charles, to just make sure people know that they can use both personal money, but they can also use retirement money to do these investments, whether it's with you at the PIP group or on their own, right?
Yeah, absolutely. And I'll expand on that and say, we were talking about my marketing director Dylan earlier. When the market crashed the first day, I think it was March 13th, before things shut down. I told him things going to get crazy. I want all of our marketing attention focused on self-direct IRAs. These are the folks that have no faith in the stock market or what's going on in Wall Street right now. I mean, there's a lot of backdoor propping up that's happening right now, and day traders making hand over fist right now. But again, like our economy, there's going to be a backstop that eventually we're going to have to hit. How hard we hit it is the question. So yeah, I mean, self-directed IRAs represent probably 60 to 70% of our business. I should say clients of self-directed IRAs. All right, let's keep going.
Right.
So we talked about no upgraded finish. Good rental numbers if lenders stop lending. All right, now this is an important one. That's exactly what happened in the last recession, right? So what happened is, they ended up having to take all this, hard asset back, take back the properties, which caused all these foreclosures to come up, which meant they had a ton of REO on the books, and they weren't liquid. They needed the liquidity. So what's going to happen if that happens again? So you want to make sure you're buying properties, even if you come in as I want to be a fix and flipper. If you come to me and say that I want to acquire something on your behalf that is going to ride out the storm, if you will, and it's going to have a really good ROI as a rental as well. So we don't want to buy a $250,000 piece of property that's going to rent for $2,400 a month. We want to buy a $100,000 piece of property that's going to rent for $1,800 a month, and that's very easy to do as long as, again, buy right. So that's the name of the game. The I put in here the gross assumed ROI because I know this neighborhood. I know all the neighborhoods that we work within. So I know that that's what it's bringing in. But I always tell investors, you know what? Cut that number in half if you want. You're still getting a better ROI than the national average. And that's what's important. But again, it all goes back to buying right and putting these additional layers on top. We also want to make sure we're buying in areas that have an economic push that's not likely going to be impacted by a recession. Now that that's a big statement. Obviously, everywhere is going to be impacted, but just like we saw in the last recession, big cities are hit the hardest. Hubs are hit the hardest. So Dallas, Dallas is going to be hit pretty hard because it's the hub for American Airlines. Now that United has mentioned that they're furloughing more, they're going to be hit pretty hard in Houston. So again, those will be great places that'll bounce back quickly, but it's going to be the big hedge fund guys that are going to be bringing that back. So we focus on areas that are still big, still have a lot of opportunity, but they're really not going to feel that pain quite as bad as some of those big cities because they have a lot of local money, if you will, in it. Now, Charleston, before this all went down back in March, Charleston had gotten to a place where they were almost as unaffordable to live in as San Francisco. And they're doing a lot of big stories about that. 20 years ago, before the recession, most streets you couldn't even walk down at night in Charleston, other than the tourist areas. So they really grew within the recession because they had a great plan in place with MUSC, which is the medical university. They essentially rebuilt the city from the inside out. And by that, what I mean is the entire campus of MUSC bought the dilapidated buildings around town, and that became the campus. And then they brought in buses to get the students around the campus. So what happens then? Well, everybody starts buying up the properties, the homes around there, fixing those up because we want to keep the heritage of a historic city like Charleston, and we want to repair those, we want to fix those, we might make them look new, and that's how they grew to being almost unaffordable. So it was a lot of private money involved in that. Savannah, Georgia is going through the exact same thing right now. 5 years ago, well, let's say 6 years ago, even though Savannah was in our own backyard, we weren't investing in Savannah for flips or tax liens because it wasn't It wasn't there yet. There weren't, the economic surges in place yet to do that. Savannah College of Art and Design is, again, it's a lot of private money. It's a much bigger campus than you think, but they're doing the same thing. So they're buying up all the dilapidated buildings around and in the city, and that becomes the campus. So all the neighborhoods are then improving as well. People cannot fix and flip fast enough in Savannah, Georgia. Now, again, because of what's going on in the country right now, fix and flip might become buy and hold as we see how things pan out. But it's all about the margins, right? We don't care about how you don't need to worry about being a property manager in this day and age or a landlord in this day and age with the technology we have. You can do all of that remotely. So you want to pick areas that are like Savannah. That have a lot of private money in them that will allow them to continue to grow. So we are the biggest buyer of distressed assets in Savannah, other than Savannah College of Art and Design. So that's our market. There's other things pushing Savannah right now. Savannah is now the largest single container port in the country. Two Army airfields, which is always a good area to look in. Fort Bragg is a good area, a good market to be in. It's a little too far for us. Um, Savannah Harbor expansion project, they're claiming a growth of 2030 by 37%. That's a ridiculous number. Again, cut it in half, and that's still an enormous growth rate that Savannah's going through. So we're stacking on layers, and we're using history to help us build confidence in being able to invest with unknowing market changes that may be coming down the pipeline at some point. Local government assistance programs. Again, now we're just stacking on stacking on stacking on extra layers. So local government assistance programs always help. You may not necessarily need them, but when it comes to doing what we do, it's all about timing, right? So you got to be quick. You want to be in and out with your repairs, to whether you're going to cash flow it or whether you're going to flip it. So again, we're talking about more layers. Dreammaker Home Buyer Assistance Program is awesome. As you can see by the numbers here, they give up to $60,000 in certain neighborhoods that we're flipping right now and towards their mortgage. So great program. Obviously, your repairs standards have to be pretty high for these guys to work with you, but ours are. And this just kind of shows you, this is just a map of where this program covers, and it essentially covers all of Savannah, even the outer lying areas of Savannah. We also have the Teacher Next Door grant, which is, again, more layers. Teachers are all out of work right now, but still being paid, but because our doors are closed. I don't know about the rest of you around the country, but our schools are all virtual based for the time being. But it's another great program. It's just another tool for you to market and create that liquidity in an unstable market. Local government growth initiatives. So I mentioned Charleston had it, and Savannah has it now too. So this is actually really cool. So they're trying to grow Savannah and have projects that aren't tearing down our history in Savannah, and are focusing on the expansion of certain areas because that's where all the Victorian homes are, and that's where we are. So it's a really great initiative. It really helps you, again, with the marketing and the liquidity of your investment. So again, we're adding layers upon layers upon layers upon layers of protection. Should the market flip to being, the banks aren't lending, the banks are going bankrupt, local banks are closing, and you know what, it could happen, but you just hold your property now and you rent that property now. People still need roofs over their heads. So that's the commonality of what happened in the last recession, is the rental market just absolutely boomed, and rental prices went up, I believe, by 20% as that crisis continued to unfold. So I'm not saying that that's what's going to happen. I'm just saying that it's important to have the mindset that you need to put a lot of things in place to make yourself successful. And this is how we do it, and this is how we've done it since I got into this in 2000. Well, I started earlier than that, but I started my own business in 2000. So this is how we work in any kind of market, whether it's strong, whether it's weak, whether it's we have a ton of foreclosures coming through the pipeline or not. That's how we do it, and we expect that there will be a lot of inventory coming our way here shortly. So I'm very quickly going to run through recession proof start to finish. I forgot I had these slides. Actually, I thought we were about to go to questions. But here's a home we acquired through wholesaler, purchase price of $50,000. Now, those of you in New York or California, if you're on this call, yes, we do have properties like this that are very good turns. So just keep that in mind. This is a before, lovely green shag carpet from the 70s. This is very typical of what we do. This is what we turned it into. So this is the same home, new windows, fresh paint, all new insides. You can see the before and after there of what we did here. Something else we do that isn't necessarily a recession proof, but it certainly helps you cut way down on your costs, is every home we have, if you go on our website, you'll see our color trends, our styles, everything is the exact same. So when we buy paint, we buy $10,000 worth of paint, and it goes to every single property, same color, same place. Everything we do is same. This was a garage that we didn't quite know what to do with, so we actually turned it into an in-law suite. Really increased the value of the property in doing that. Obviously we nearly doubled the square footage for a very minimal cost in doing so. This was the outcome of the investment, and I would stress here when we're talking about self-directed IRAs, some folks, they've got, let's use this as an example. He had $62,000 that he could invest total. So what we essentially did, because we found all that extra space and saw that it was plumbed, essentially was we just thought it was a garage at the time, but if we saw it was plumbed, we could add some more living space. So PIP took it upon itself to make those improvements. Jerry or whoever the client was, maybe he didn't have the $49,000, but we know that the profit would have been more if we injected more capital into it. So we will sometimes do that as well. And again, if you're doing this for yourself, these are great little creative tricks that will increase the value and will increase the marketability of your investments. This property stayed on the market 3 days, and it's because we went out to that garage when we saw that it was plumbed, and we said, oh yeah, this is an in-law suite. We have to finish that. They call them carriage houses here, but it's an in-law suite. So with that, that's my contact information. And if you have any questions, I will just say, before the questions pop up, we can't answer any questions about our fees, about our contracts, or anything like that. It's all educational, so fire away.
All right, so Charles, thank you. And just as a reminder, folks, and I have seen some questions coming in, on the right-hand side of your screen, there's just a button, a little triangle that says questions. Just type your question in. I'll read those out loud, and then we'll let Charles answer those. So the first question, some of these are going to be more like opinion questions, Charles, but I think that's part of the reason people are tuning in today.
Yep.
So someone is saying that I had heard that the government lenders, so Fannie Mae, Freddie Mac, VA, the big government backed. So these guys have put a moratorium on foreclosures through the end of the year. And so it sounds like, nobody can foreclose. And so your thoughts, what is this? This feels to me like there's going to be quite a backlog, but your thoughts, at some point, they can't do that forever. What do you see happening down the
Right.
line?
Yeah, so inventory for us in the foreclosure aspect, yes, it is way down. There were still a number that were in the pipeline before the COVID phase 3, but yeah, they've put a moratorium on them, but that doesn't mean that they're stopping. It's like you said, it's going to backlog, and then what's going to happen is depending, I don't want to get political, but depending on who our next president is, it'll either be released back into the market slowly, which we call a ghost inventory, or it will flood the market for private investors. So ghost inventory essentially is a way of establishing, a lack of panic, if you will. It's almost like it's hard to describe, but all the inventory is there. The foreclosures are still happening. They just don't go to auction nearly as quickly. So you still have that action going on, but that kind of balances things out a little bit.
Yeah, and that ghost inventory, is that a scenario where maybe they're selling off these loans so they don't get to foreclosure? So maybe they're selling them to a big hedge fund like Blackstone or whoever's in that kind of business.
Some of them, yes, absolutely. And then some of them, it's when we were working in the last recession, we were doing a lot of work outside of Atlanta and in one of the suburbs. And at that time, they were only allowed. They may have 30 to 50 foreclosures that were ready to go to auction. They were only allowed to release 10 to 15, and that was government mandate. So it's the inventory is there. It's just how quickly it's being allowed back onto the market.
Got it. So this next question is looks like specific to Savannah, but the question's asking, so what happens in Savannah if students aren't allowed back on campus? What does that make that market look like?
So they are back on campus, and they seem to be doing pretty well. It's everything's open that is private. And that goes for where I am at in South Carolina as well. Everything is open that's private, so all the private schools are open, and they're in full session down there. For the most part, you wouldn't even know we had this going on, with the exception of everybody walking around with masks. And again, it is Savannah. It seems like a very select market, and Savannah College of Art and Design is the big push here. But they have a campus in Hong Kong, Atlanta, Lacoste, France. So they're actually a very large school, just with a very small name.
Yeah, appreciate that. The next question is asking if the PIP group offers tax lien funds. Obviously, you can't go into a lot of the details, but do you offer funds that invest in tax liens?
So we do have a few clients that we could recommend to you, that we represent. They are some pretty big funds, that they do, but we do not have a fund. Everything we do is considered a servicing agent, which means that you own 100% of the investment, which is why we're on this call right now, because you're able to use your self-direct IRA to hire us, if you will, because the investment's still 100% yours. So it's your investment. It's recorded in New Direction, IRA, FBO, so forth, John Smith, or however you guys set that up.
Yeah, yeah, totally makes sense. Um, Next question is kind of asking, do you go to either the tax deed or tax lien sales? Are you active in those arenas?
Absolutely, in select markets, and if that is directed at, do I personally go? I try to, keep my beak wet, but we do have a lot of other folks that do it for us, these days. As far as the foreclosure auctions, yes, I still very much am involved in those. I'm very much boots on the ground, if you will, with everything we do. Um, I'm not a big fan of going up to the cold gray state of Illinois for our Illinois tax sales, which are coming up here in a month. So I don't do a lot of that anymore. But for the most part, yeah, I'm still very boots on the ground. I do a lot of the buying.
And what are you seeing, or what are those folks telling you? Are the sales being postponed? Are they still going on? What does the inventory look like? What's kind of the scene in that arena?
So everything that was triggered prior to the moratorium is still going to auction. So there's still auctions. Inventory is way down for sure. because of the moratorium. But again, a lot of what we acquire is not through the foreclosure auctions. So our business is actually growing. We're acquiring more inventory now than we were 3 months ago. So for us, it's fine. We're looking forward to. It sounds bad. We're looking forward to what's going to happen because it's really good for the type of business we're in. But yes, I mean the inventory as far as foreclosures is concerned is down. I'd say 90% right now.
Wow. All right, I'm going to take one more look, and we have another question here, and this question is asking, can you tell us about an investment experience that didn't work out as you thought it would? What happened and why?
So that's a great question, and so I'll answer that question with we do screw up, and there are surprises that happens. We audit ourselves every year, and our fail rate, i.e., those that we lose money on, is about 7%. But I will stress that we lose that money, the client doesn't lose that money. So we're a volume business. The other 93% that we profit on, we're able to make up for if there's a potential loss on an investment. So when it comes to fix and flips or cash flow long term holds, clients don't lose money. If it comes to tax liens, there's a lot of uncertainties there. And a lot more decisions that have to be made with tax liens from the investor's perspective that we don't have control of because again, it's 100% your investment. But there are circumstances where we opened up a wall and we thought we were just in there to put some new drywall up, and all the walls were eaten up by termites because you don't get to see inside of these houses before you buy them. We're good at being creative, but there's absolutely some circumstances where PIP has lost money, but the client has not. I hope that answers your question. I can't think of a specific where the client lost in the fix and flip side of things.
Right. No, yeah, good answer. And I can only imagine a wall full of termites means you probably have a house full of termites, and that's almost a scrape or
Yeah,
something way beyond what you were expecting.
yeah. I mean, we had one. I absolutely thought it should have just been a tear down, and we should have just paid the client out of it. But we ended up, again, we just got creative, and we used our funds. We added an extra bedroom and an extra bathroom, and that was kind of our saving grace to make it profitable. Otherwise, we would have been out of pocket because our responsibility as your servicing agent is to make sure that if we make those mistakes, that we rectify those mistakes.
Yep, absolutely. So as I'm looking, I'm not seeing any other questions at this point. Charles, I was wondering if you could advance the slide one more for me,
Yep.
and just mention that if uh, you're interested in using retirement funds and maybe getting into investments outside of those publicly traded securities, here's some contact information for New Direction Trust. We've been around for coming up on 18 years. We help folks with not just these kinds of investments, but all sorts of investments. So we've had clients do all of the things that you mentioned, whether it's fix and flips, buy and holds, tax liens, tax deeds, all those things. We've certainly worked with those clients. And so, Charles, we did have another, whoop, take that back. We did not have another question come in, but I wanted to thank you for coming in today. That was very interesting and some great information. And thank you so much.
Yeah, absolutely. And just a reminder, that I do talk fast. So this will be recorded. It goes out to everybody. And if you have any questions, I'm very much reachable, more so by email than by phone. But happy to share all the knowledge I have.
Wonderful. We did have another question come in, and so Gary, I'm more than happy to discuss the fees on a one-on-one basis. It's somewhat dependent on what investment we're talking about. And so it's a little bit more involved conversation than I think we could do here. So please reach out, shoot me an email, give me a call. I'd be happy to answer your question. But with that being said, Charles, again, thank you so much. We
Thank you.
appreciate everybody, tuning in today. Everybody be safe, and we hope uh, nothing ill going on, although we have some scary things happening right now, but we certainly wish you all the best. And everybody take care. Thank you, Charles.
Thank you. Take care.
Take care.